U.S. is about to default on all its debt, Jason. We're going bankrupt. It's the end of days.
Yeah, you better not go all global macro and geopolitical on me today, because you're just going to get some epic rants then.
That's what I'm going for. That's what I'm going for. Listen, before we even start, let's get the disclosures and disclaimers. Let's get the legal nonsense out of the way. Well, actually, first, maybe we should introduce who we are. This is the Pirates of Finance, aka the Pirates of Nonsense, the show ostensibly about markets, business, finance, most likely to get off track very quickly. Voted most interesting but least useful podcast of Q1 2023. Thank you for those who supported us. Still issuing PPP loans. Learn more a little bit later. The handsome man in the what was the bear show? The show with the bear that had that hat? I'm blanking on it. With the Paddington Bear hat on is Jason Buck. That would have been a good insult if I could come up with it fast enough. No. The handsome man, Jason Buck, across from me. I am Corey Hoffstein. We are your co-hosts. Nothing we say, do, act out in sign language or interpretive dance should be considered legal, financial, accounting, or really any sort of life advice. Talk to a professional, a therapist, an advisor, whoever you need. That's it. Jason, I was going to start with a little global macro. There's two things I want to say.
Yes.
The first is just an observation. I have learned to hack Twitter.
You did.
I figured it out. I have. This is 2 or 3 times now I've done this tweet pattern. And I don't want to say I'm playing the people like a finely tuned instrument, but I've figured it out. Here's what you do. If you want engagement, all you have to do is say, my whole timeline is saying X. Why is X wrong? And people come out of the woodwork to tell you why X is wrong, because everyone wants to seem like they are counter the prevailing narrative, especially in markets. So it was earlier today, maybe yesterday. I've lost all track of time. I said my whole timeline is got the bearish macro thesis. Everyone thinks we're entering into a recession. Why is that wrong? I mean, 100+ comments in very short order with all the reasons, none of which agreed with each other as to why we're not entering into a recession. But knowing that the Twitter algorithm has now been published and that those early replies and likes juice your viewership, man, oh man, I feel like an engagement farmer. Just out here, I'm a humble engagement farmer.
Yeah, do you think it's like now you feel like you have this superpower where you can just drop smoke bombs and walk away and watch the thread just populate below?
You know, now that I know about it, I feel like it's like that Uncle Ben moment of like, with great power comes great responsibility. Like, I'm like, I could juice myself to 100K followers. I know how to do it. I feel like Anthony Pompliano in this moment. Like what's the saying? You either live long enough to die the hero or become the villain. Like I got 2 paths here.
Except for you, speaking of which, you've also gone full thread boy, like where you did a thread boy on thread boys on threads. Like you just went
thread squared. Absolutely.
The thread var swap.
I'm tweeting way less. Well, what's funny is I don't think I'm tweeting less. I'm just losing time. Like I went to bed last night. I put my son down. I went to bed. And immediately I hear him start crying. And I'm like, oh, I just put you down. I didn't. It was 5 hours later. It was like I jumped forward in time. So I get up and I feed him and I change him and I put him back down. And immediately he starts crying again. I'm like, what now? It was 2.5 hours later. I'm losing time, Jason. It is just disappearing. And so I think to myself, I'm tweeting quite a bit. No, there's days that are going by I'm not tweeting. So I got to make up for it with a thread squared.
Time travel. It's like when you smoke, or more importantly, eat your vitamins, you tend to time travel. But now you, with baby brain and not getting adequate sleep, you're time traveling.
I was going to say, these are different vitamins that I'm taking. All right, I want to start. I feel mean to do this. I'm throwing you under the bus a little.
Oh, God, just a little. Can't wait for this. Can't wait for this.
It's a friendly toss. You're still going to get hit by a bus. But
I think you still need a mustache to do this, where you twirl the mustache while you're doing
sort
this.
Of like, haha, isn't it funny? I'm about to throw you in front of a bus. we were talking about a mutual fund, a strategy that's wrapped in a mutual fund the other day. And you sent me a screenshot and you said, looks like the fund hasn't done so well.
Yeah.
Now you made the, I don't think this was an error you meant to make, but what you did is you Googled the fund ticker and then screenshotted what Google plotted for the return. It posts the NAV. And one of the things you might not have been aware of, I will give you the benefit of the doubt, is Google does not give you the total return. It gives you the price return of a fund.
Yeah.
If you are plotting the price return, you can be missing a meaningful part of the actual return of a strategy. So we were talking about a future strategy, which tend to have really big tax distributions at the end of the year, because all that commodity trading normally gets wrapped in a Cayman wrapper that bubbles up as income. Everything else gets 60-40 tax treatment, realized because you're rolling it. So you get tons of realized cap gains and income that gets distributed at the end of every year. And it looks like, you know, this big drop in price. And so you can have these strategies that are consistently posting positive returns that, if you just look at the price return, looks flat, if not negative. And this is something that I'm not sure a lot of people are necessarily aware of. Like, I see this happen a lot. People post charts and they don't realize they're posting a price return and not a total return. And I think this is something that I take for granted as being like very obvious, but I want to spend a moment to talk about it because I do think it's really important that when people are doing analysis, they both on asset classes or individual securities or strategies, they are actually looking at the right thing.
No, you're 100% correct. I am clearly an idiot, but also I was just doing something quick on Google and just to send to you, but also because in my world, nothing we do can be Google. You can't Google anybody's track record in my world, and everything we do in my world is total return in futures and options. So that's what I'm accustomed to. And right, I just screenshot like a mutual fund. I totally forgot about mutual fund distributions, K1s, all that stuff. And you know, like that's, but like to your point, how many people make that mistake? Like you said, sometimes when people are looking at any form of S&P index and you see those drops, they're not taking account the dividends, right, and the yield on that one and being taken out. So yeah, go on your tirade and bring that up.
Yeah, well, so I think a really easy example here where none of us will get in trouble is if you go to Google and you type in HYG ETF. So HYG being the ticker and then ETF. And what will come up is Google will plot the iShares, iBox, high yield corporate bond ETF price over time. And if you hit on the chart max, it'll go back to 2008-ish. And it'll look like this ETF started at a price of about 105 and is now trading at a price of about 75, which would make you think this was a losing strategy. The problem here is what Google is plotting is the price return, the price of the ETF every day, the NAV, like what is should be in theory tied to the NAV, not the total return. So I'm using this as a particular example because I think it really highlights the problem. Within this ETF are high yield bonds. If I buy a high yield bond, or really any bond, what is my return going to come from? It's coming from the coupons, right? In the short term, you might get some price change in the bond from changes in credit spreads and changes in and defaults and changes in interest rates. But if I'm holding all these bonds from their sort of addition to the index to their maturity, then the total return is either it defaulted and I got some recovery, or I got the coupon over time. Everything else is sort of just noise. And so if you're only looking at the price return, if you're not taking into account all the income that was generated over time, all you're left with is the defaults, right? Some noise and what happens with in the short term with interest rates and credit spreads. But over the long run, it's just defaults. And so you would actually expect the price return series of an ETF like this to go down over time. The total return hopefully is going up, right? That income you're generating is more than compensating you for the defaults that are happening. But if you're only looking at the price returns of something like a bond ETF, you're going to lose money. Now, you would think this is obvious to most financial professionals. I will say I was once on a trip in Canada. I have an index that I manage that's tied to an ETF product there that is an income-focused product. An advisor pulled up the ETF ticker on their, I think they use Thomson machines up there, not Bloomberg, Thomson machine, which defaulted to price return and proceeded to tell me that unless I did something to make the price go up, they would never buy the product. To which I pointed out that's not possible unless you want me to actively trade these things. If I'm just generating the income, all the return comes from the income. You got to look at the total return. Needless to say, I did not get an allocation from that advisor. But I think it's really critically important here that people understand when you're looking at an asset class or a strategy, you should be looking at the total return.
Yeah, like Dennis David said in the comments, in hedge fund land, it's like SPTR versus SPX, and that's what I'm saying. Like we use SPTR, S&P total return, so like that's what I'm used to. But like, why do you think if ETF or mutual fund or index, whatever, if it has, you know, dividends, distribution, yield, or you know, K1 income, you know, why isn't the default total return? Why is the default price return?
Well, I think the default is price return because plotting the total return requires back adjusting the price, right? So when you plot the price return, you're basically saying what was the price on that day? What was the actual ETF trading? So you can just get the data feed from the market and say, okay, this is what the price was. And you can just plot those prices over time. That is not wrong. But what it's ignoring is the fact that you had this income that was paid. Well, how do you account for that in the return series? I think an example would be, let's say there was a company that did a spinoff of 50% of their business, right? So you own Acme company and they do a spinoff of 50% of their business as XYZ. And so you get all of a sudden the shares of Acme drop by 50%, but you get these other shares XYZ. Well, if you plot the price return, Acme company looks like the price dropped 50%. But did it really drop 50%? Like, is that the right way to think about it? If you're trend following that stock or you're a momentum investor, like, did the company really lose 50% of its value? Well, yes, but that doesn't mean it lost 50% of its value because, you know, like there was this negative shock. Shareholders actually still have the same equivalent value. So what you need to do is you need to go back to all the historical prices and basically back adjust them in a ratio manner. So in that case, you would basically divide all the historical prices prior to that by 2 so that you can appropriately track the price going forward, which means when you look at a total return index, like the price of the total return index at any given time doesn't actually reflect the price it traded at. But it reflects the total returns an investor generated. But I've had these fights with people who do technical analysis. They often look at price return charts, and I say you can't look at a price return chart. First of all, I'm not going to debate whether you can or cannot do technical analysis. Limited point here. The limited point being you can't look at price return charts. You have to look at total return charts. Because again, you can have these examples where, you know, if you were to look at high yield bonds, for example, and look at the price returns, you would never buy high yield bonds, right? You obviously care about the income. If you have a company that suddenly pays out a massive cash distribution, it's going to look like a big sell from a momentum perspective. Well, that's not a sell necessarily. It's just that they took cash off the balance sheet, and of course the share price has to adjust down. Doesn't mean the future earnings are impaired or the growth potential is impaired, right? The total return can still be the outlook can be positive. So you really need to adjust for these things. By the way, if you go like to Yahoo Finance and go to their historical data on everything, like they have an adjusted close they make available to you. So it's all there. Morningstar, all the funds are done in total return. It's just if you Google something, they're showing you price returns.
You know, it makes me think about in futures and options land, like we were talking about SPX, you know, X dividends. For years, you and I have been talking about dividend trades because, you know, there's a whole dividends markets in futures, you know, whether it's domestic or European, et cetera. But you haven't talked to me in a while about the European dividend trade. Are you still interested in that, or is that long gone?
Dividend futures, dividend swaps?
Yeah. We used to talk about this a lot.
Yeah, I haven't paid attention to it in a while. So basically, here's what happened. I had enough chats with Ben Eifert, a friend of QVR, who made me realize that there's enough subtlety. First of all, I couldn't trade it anyway. There's reasons that I was restricted from trading that stuff, like I just mandates and all that other stuff. But when I was like, well, maybe I'll explore trading it, I was like, this is such a illiquid, weird market with so much nuance that the only way I'd feel comfortable trading this is bringing on someone who's traded it before and knows all the subtleties. Like I got wise enough to know I didn't know, and that is just a good reason for me to remain arm's length, with the exception of I think this is sort of true for a lot of things in financial markets. When they get so out of whack, so weird, that there's a margin of safety for all the things you don't know. Like, they get so fundamentally broken, like March 2020, that you can go, this stop making sense. Like, these are clearly people who are being forced to trade. These aren't economic buyers and sellers. This is someone getting a risk tap on the shoulder. Okay, I can sort of overcome the hurdle of my ignorance, but that's 0.001% of the time.
Yeah, there's a unique thing, especially in European divvies, where like there's 4 sellers, right, at an institutional level. So if you can map kind of whole territory and know who the players are and why they're selling, there's interesting opportunities there. But then also the forwards are like crazy years out, and the different contracts you can trade always are like, it always messes with your head a little bit trying to think about those trades. And like you said, you better have some sort of specialty or be able to map who the primary players are in that space, or else you can get burned. And we've seen that many times. So in the comments, by the way, they're saying we're talking about finance today, which who are we to talk about finance?
Who are
so
we?
You got me?
How can we be so bold? And maybe I will say maybe not just interesting, or maybe it's not interesting, but perhaps useful this time. We got to find the balance of both interesting and useful. I think what I just talked about was actually useful, but not interesting at all.
Exactly.
So
I got some random shit for you.
People off the first 17 minutes of the call. That was actually just a test to see.
If you made it this far. If you made it this far, I was asking you earlier this week because I can't remember if I'm rereading or like your brain fog is now my brain fog as well. The And a Bottle of Rum book.
Yes.
And there was just some things that popped out in me again, because what a phenomenal history that is. Whether any of it's true, who cares? The storytelling's phenomenal.
Yeah, you did send me a message where you're like, did you know about this history of rum thing? And I'm like, yeah. And you're like, have you read this book? I'm like, I'm 99% sure you recommended that book to me. Like, I'm sure
I bought it for you.
If we just scrolled up in our WhatsApp chat, I'm 99% sure you recommended it to me last year.
Well, the good news is some other things popped out in there for me though this time. One was the difference between pirate and privateers, and how basically privateers are pirates though with like the government's blessing, not necessarily the government's backing, but the government's blessing, and you got to give your vig to the government. And all that reminded me of is like, is that basically the past version of today's crony capitalism?
Probably. Right.
Right. Like, you're just using, like, government is giving you that extra push and assist, even though you're not technically like a GSE. And then you're using all of your K Street lobbying to give back to the government. And then therefore you're a privateer and not necessarily a pirate, but you try to pretend you're a pirate.
I'd be curious as to how much more gray area there was in government operations, like to have things like privateers, than there is today, because in theory there's more visible scrutiny in the way everything can be recorded and instantly transmitted around the world. I say that also means the government can probably operate in much more shadowy ways. But I wonder if like the amount of illegitimate behavior among government actors has decreased over time because of that. Maybe that's just optimistic thinking. Like, could privateers really exist today?
That's what I'm saying. I think it's today's crony capitalism, right? All your Fortune 100 companies are privateers in my eyes. Right.
Maybe.
And then so the other one that I thought was interesting is like, people talk about I think it was like the CEO came to say that like GPT is like as big as the invention of fire or electricity. So I was like, people always bring those up, like the wheel, fire, electricity, but the one that people don't usually talk about is like salted cod, bacalao, like how much that changed the world for people to be able to be, out on ships for months that are years at a time, or, how people could then use, salted fish to survive during lean times and everything. But reading the rum book again was like, it reminded me of on the ships, they couldn't have water or beer. They would go bad. So they could have like Madeira wine and everything, but that was expensive. But rum in casks gets better over time. So it's like rum, the liquid version of cod, and that's what truly transformed the world.
Yeah, I loved that in the English Navy, they were given a ration of rum, which was still a thing until like the 1950s.
1970 to be exact.
1970, like which is pretty funny because you're like, all right, I could see a bunch of sailors in the 1800s. They need their rum. No, this was a tradition that kept going, and you read about how much rum they had, and I know it was watered down, but it was still like the amount of rum they drank in a day would have me face down on the floor.
It reminds it all when you look at all of that, whether it was their rum or how much wine like Greeks and Romans drink on, like you're saying, like a daily basis, or farmers over time have drank beer or cider. It is shocking. Like, and even right around the time I guess I was born, people were still having, the Mad Men style, like 3 martini lunches. And one, I'm like, what happened? I guess we get so specialized in computers and everything and electronics that we can no longer get sloshed at work. I mean, what happened to the good old days?
That's why we're less creative today. We're not all getting absolutely smashed at lunch and getting those creative juices going. One of the things I loved about that book, and again, so the name of the book is "And a Bottle of Rum," history through the lens of rum, or something like that.
Yeah.
It basically makes the argument that rum, a lot of people would think of bourbon as sort of being the quintessential American drink today. And the argument is actually it was rum. Yeah. Rum was the thing that was really the founding spirit of the United States. It was the spirit that was most consumed up until Prohibition. And it was actually, I think Prohibition was what got rum sort of pushed down during Prohibition. Moonshine picked up, and then you saw bourbon eventually eclipse post-Prohibition. But until then, rum was the drink of America and was very unique to America because of all the sugarcane access we had in the Caribbean.
The other part of, like, that you actually referenced with the tot is when the Navy, secured for every one of their sailors, is it goes back to, it was EDF Man, I believe in 1770s that created that contract with the Navy, and they're the ones that supplied the Navy all the way till 1970. Like you said, that's the formation where EDF Man also like split off into Man AHL, and now it's like Merrick's is buying some of them, but like that whole Man group goes back to just rum contracts with the British Navy in the 1700s, which absolutely amazing, shocking to me. They build commodity houses and trading houses and all that stuff out of. But it also reminds me that, like,
by the way, I did not put that together.
Yeah,
I did not. When you mentioned that to me, and I
texted you that,
I did not put it together that was the same Man AHL.
Yeah, same. And so, but it made me just depressed because compounding really requires time. And if your business started in 1770, what fucking chance do we have?
Oh, it makes me think, actually, the thought that went through my mind is if you knew, like, if you could rewind the clock to the 1770s and you're like, I'm going to have this government contract for 200 years.
Yes.
What is the net present value of this contract? I mean, that's wild to think about.
Yeah. What would be your DCF model on that? Your lifetime value of your CAC model on that one.
Yeah, good luck figuring out the interest rates.
But part of it, you said, what happened when we used to drink, 3 martini lunches and have fun. Have you seen this Stanford Fun Strikes Back movement?
No.
This is so good. So there's apparently a revolt going on at Stanford with the students. And here, I'll just read you kind of like the top kind of paragraph of their revolt. Stanford used to be weird and wonderful. Where did the fun go? Stanford today is a completely sanitized version of its former self. Administrators have meddled in every aspect of student life to strip Stanford of its character. In the process, they disrupted the organic, wacky, and inclusive spontaneity that made Stanford so special.
So what's their proposition?
So they have all these other things I'm not going to get into, but like my point is, like, I wonder, I don't believe in fourth turning and all that nonsense, but it may be exciting to me to see that maybe fun is coming back. Maybe this youngest generation is tired of all this. Like, they want to bring back, the Jejun experiments. They want to I doubt they're bringing back the 3 martini lunch because nobody drinks anymore in California. But, maybe there's a revolt happening. Maybe this is the little seedlings there that, like, students don't want to be so serious anymore.
Yeah, I mean, I think like my feelings on this are that 99% of people in the United States don't give a flying fuck about any of this stuff going on. We're all just rationally in the center, and the bickering 0.5% on both tails are just obnoxiously unbearable and dominating social media and dominating traditional media. And we're left thinking that everyone's insane when in reality, most of us would do pretty well to sit down with a beer and maybe even a Bud Light, you know? Because I guess, you know,
are you trying to set off the comment section? I mean, now I should get your Twitter smoke bombs. Now you're going to do your verbal smoke bombs on this?
I just listen. I've been really. I'm not a guy who delves into the political, but I am someone who likes to think that I'm reasonably rational. And I don't know what is going through people's minds when they're pulling out guns to shoot a case of Bud Light because Bud Light had a rainbow can. And then they're like, well, I'm going to drink Stella. I'm going to drink Coors. It's like, you fucking morons. First of all, that's all Molson Coors, who has been more supportive of the LGBTQ community going back to the 1980s. Like, there's like 2-3 beer businesses that dominate everything, and they're all incredibly supportive and inclusive, or at least moving in that direction. I guess the only way to protest, the beer turning you gay is just not drinking beer anymore. I feel like either I've completely disappeared or Jason has. Oh, Jason. I lost Jason, huh? So that's good. I'm ranting to myself. This is the stuff that'll get me canceled. Okay. Well, Tyler, you want to jump on with me? Let's Tyler, you got time? Oh, there, he's back.
What an opportune time for my internet to go out.
I was like, I don't know whether I just got cut off mid rant or lost you.
Oh my god, that was so perfect that my internet went out right during that rant.
That's good. I got us canceled from the internet.
I don't even want to know what it was. I don't want to hear. I got some random stuff that we can go back to finance. The other thing I came across this week that I thought was interesting is when, do you remember we were in Miami and we were out on the wall, we're looking at that skyline, and one of the new skyscrapers in Miami is that new Waldorf Astoria hotel and condos that looks like blocks that are going up. And you remember like jagged block looking? Well, what I was watching this video earlier this week is like, to be able to build that, they've come up with this hybrid called deep soil mixing. And what they're doing is as they're drilling like down into the earth, they're mixing concrete with the sand, and they're creating this new slurry that creates the hard ground swell that as long as they can keep the water out while they're doing it. And then that way they can drive those pillars into the ground. So then if those hurricane winds are hitting those buildings, they have this new, they're calling it soilcrete, which is this mixing of sand and concrete. And they actually stole it from like LNG and gas facilities in like Houston and everything. That's how they're building the pads for like all of the oil cargo.
That's interesting. So is the idea that it's stable but has a little give?
Yeah, stable has a little give, and yeah, it's a way for you in Miami allegedly to build skyscrapers as long as you can make sure no water gets in while you're doing it. It's just kind of an interesting new technology or innovation. And the new Waldorf Astoria building skyscraper in downtown Miami is like kind of the first one to really prove that model. And so like you don't have those situations like we have it with Salesforce Tower and other things in San Francisco that are leaning towers a piece of these days.
I think about those high rises whenever I'm in a city, and I'm always thinking to myself, like, these are pretty permanent fixtures in a way that like we have to think through what the skyline's going to look like in 100 years, right? This is art in many ways. And some of these buildings that have been built, I'm just like, this is oppressive visually. And maybe that's just not my style. I know in the 1970s, everything was like the concrete, harsh lines. But I look at like in Boston, like the most of where they had the judiciary branch is just these like harsh concrete buildings that you're like, this is just like horrendously ugly, and it's going to be that way for 100 years. I don't know what it's going to take for them to ever tear it down, because that's not going to decay. But you really think to yourself, like, who is in power that should be making these decisions about what the skyline actually looks like?
Well, there's two things on that. One, I don't think I've ever told you, my brother used to wait tables at top of the hub, at the top of the Prudential Tower. Yeah. And he used to talk about how much the building would move while he was working, waiting tables. He would also, I think he put pedometers on us once. I think he was walking 10 to 15 miles a night because that place was so big to get back to the kitchen and back to the tables.
I believe
it. Was just, it was like he couldn't keep weight on. He was just working out so much, just waiting tables there.
There are stories, by the way, the Hancock building in Boston of early days. It used to sway enough that glass windows would just pop out.
There's another one. We were at that cemetery right there, you know, right in the middle of town, you know, where they have a lot of great, you know, historic Americans are buried there and all that stuff. And I heard this family next to me, and this kid goes, "Dad, who is John Hancock?" And he goes, "He's the one that built the tall buildings." But the other thing about like, where did this ugliness come from? I think it's an Austrian architect. When I said last name is Lutz, Lutz, I believe, and first name maybe Adolf. I can't remember his first name, but basically he was the one that started the modernist movement because he was trying to revolt against ornamentation. You know, there's this movement that historically we used to build buildings to be beautiful, and they had all this ornamentation to it that was superfluous but made for a beautiful building. And he was
gargoyles and all that stuff.
He was a reactionary architect, and he created like one of the first houses that was kind of block and had nothing around the windows or anything like that. And so, and then from there, it just kind of took off as a movement. And then, of course, real estate developers, investors, everything, they loved it, right? More margins.
Right.
And so it just kind of like, it took off on its own. And so it's been interesting. But then I also like, I actually don't mind like tropical brutalism that you get in like Brazil, where it's that mix of like concrete, wood, and glass. And then with the proper tropical foliage, it doesn't actually, it's kind of offsetting. It doesn't look too bad as long as it's not too stark around it. Like you're saying, what is it? It's like the courthouse and police building in Boston, right? That's just so bad. Or it's just like, that concrete pad is what makes it horrible, like leading up to it.
So when my wife and I were living on Cayman, there was one house in particular. It's this house called Turtle Run, I believe, right on 7 Mile that is well protected. You really can't see it, but if you're walking on the beach, you can sort of see into it. And it is, for me, like the perfect style of house. And it turns out it's like called like British plantation, or like, I don't know, British oppressor colonial like style. And I was like, ooh, I don't love that. My favorite style of house is basically like, you know, the colonial oppressor style. But it was probably preferences.
It was probably Bermuda plantation. Yeah, it's like those have like they have an interesting like look to them. They have that like kind of waved cornice on the top and everything that's like a kind of an onion shape. That's always interesting.
So once again, this is the Pirates of Finance, where we're talking about architecture, I guess. Moritz
said Adolf Loos. I just want to get the architect's names right. I was close. Adolf Loos. Thanks, Moritz. That's exactly who it was.
I want to bring this back to macro. You sort of hinted, which brings me back to the tweet I did talking about recessions, and someone mentioned the idea of recessions being self-fulfilling. That if enough people believe a recession is coming, they're going to cut spending. And if they cut spending, that'll create a recession, and it becomes a self-fulfilling prophecy. And to which I replied, you know, there's this interesting dynamic nowadays, and this was an idea that didn't originate with me. I don't know who to give credit to, but this idea of social gamma, which you and I have talked about in the past, particularly as it related to the meme stock era, that all of a sudden you could get a ton of people online acting in the same fashion, and the digital world allowed things to accelerate a lot more quickly. Same thing arguably played out with Silicon Valley Bank. Bank runs can happen a lot faster digitally when you don't actually have to show up, when you can just go online, right? I'm curious as to your take. Does social gamma mean that recessions can happen faster?
Faster? I think that's interesting. Like you said,
just generally and then more broadly speaking, if you want to get philosophical, social change.
Yes and no, because I would say there's countervailing forces, right? That's the problem with technology. Like the good and bad about technology is like, one, you can have that social gamma, but you can also have it in the other way as well. But like you said, I wouldn't be surprised if it accelerates things, like where you could have a faster dip into a recession and maybe even potentially a faster recovery, especially if, as we talked about in the past, those things are behavioral. The problem with behavioral economics is it's bullshit, but everything's behavioral. So it's both right and wrong at the same time. But yeah, I think that somebody said that, you know, the Silicon Valley Bank or the FTC never predicted a world of cell phones, right, for bank runs. And so, you know, physical bank runs were at least attenuated by your ability to get down to the bank, where now you could just, you know, punch it into your phone and all your VCs tell you to sell at the same time. So you think it could potentially accelerate the recession, but then what do you think about peak to trough or duration of recession then?
That's a good question, right? If it can accelerate the recession, does it run the risk of creating a more rapid cascade? Like it just becomes deeper, it becomes more self-fulfilling.
Yeah,
Right?
it's like I
How
wonder
do
if
you
it's
sort
more
of
like an
break that
87
cycle?
crash. It's like an 87 crash, but then what I'm asking is, does it recover just as quickly, or is the duration longer or shorter?
Well, the thing about recoveries to me is like a recovery is ultimately driven by how much permanent impairment there is, right? Like, and we should specify whether we're talking markets or the economy here. But like, you can have a major sell off in the economy or markets where all the parties are left bankrupt and there's no one to buy and get a appropriate repricing of assets, right? Like you can have a depression style event where it sells off and then there's not enough credit impulse in the economy to reaccelerate and everyone just ends up sort of in this malaise. So I think there's a point where if things accelerate off a cliff fast enough, you can have enough permanent impairment that there is no rebound.
What do you think about though? It, in a tangential way, it makes me think about if we have, as everything moves in waves, and we're having maybe a resurgence of populism or labor class beneficial economics. Do people start to wake up to the idea that the stock market is just this fictitious digital economy and doesn't affect Main Street? Unfortunately, it affects Main Street, as we know, with credit supply and credit liquidity. But otherwise, are we eventually going to get to a point where they're like, yes, you're having these exacerbated sell-offs or bank runs, but it has nothing to do with Main Street. So why are we playing these games?
I'm not so sure. Let me maybe argue the opposite side, which is as people have continued to use 401ks and defined contribution plans as retirement vehicles, that they their household budget has become more intrinsically linked through the wealth effect to the market. Right? If you used to live in a world of a defined benefit plan, an old school style pension, like I don't think you didn't care. Like you had your savings, but you knew the pension was going to pay you. So you're working for your pension. You weren't investing in the market and you were blind to the valuation of the pension largely. In theory, the corporation was supposed to report on the pension. And the risk was the pensions went bankrupt. But you were sitting there going, I don't need to save. I just need to cover my bills. I'm going to have this cash flow payout. And you weren't tied to the market in theory because you had this annuity that was coming your way. Now, where people are having to save for their own retirement in a 401k, if all of a sudden you go, holy shit, my life savings just dropped 50%.
Yeah.
In my 80-20 market portfolio, I'm not going to go out to dinner as much, right? So I wonder if our move to market-based retirement accounts, highly transparent market-based, retirement accounts, creates a tighter wealth effect to the real economy. Perhaps, as the grenade I will lob, they should not report the valuation of those vehicles. We should be volatility laundering. Right? Totally delay and smooth and just outright lie.
I like where your head's at on this. I'm going to take a little bit different direction. That was like, as you know, I don't believe like this whole 401k experiment is like, we haven't even gone through one cycle yet. So I think people think we've been doing it for decades. We only have one timeline yet for people to go through a full cycle and a full retirement cycle.
We do. A full retirement cycle, no, but
right.
To your point, I don't want to cut you off, but just for facts, 401ks, I think total assets early 2000s was like 10 billion, and now it's several trillion, right? So when you talk about like for someone like me, I'm like 401ks have always been around. No, they haven't. Like the whole glide path concept, like that's all brand new, and by the way, fundamentally changed in 2008 from like a to retirement to a through retirement, as certain plans did really well in 2008, other plans didn't. It's still very much an experiment, and I think we don't really truly understand the reflexive impacts either on the market in terms of how these things are being allocated or on individual spending. Sorry to cut you off. Go ahead, Jason. I will shut up for 5 minutes.
Cutting me off and then front running exactly what I was going to say anyway. But no, and you just highlighted my point, or even, you know, put some weight under it. Is that's the idea? Is like we haven't run this experiment yet. We're running this grand experiment, and we have no idea how it's going to turn out. So we have no example of it being done before, and so we just assume it's going to turn out well. But what happens, like you're saying, if the wealth effect is then cratering and people's savings and their 401ks are down 50-60%, but at the same time it could get exacerbated by the other part of the wealth effect is the housing prices are down at the same time. Like, we have no idea what this looks like, and we don't know if people are underwater for decades at a time, whether going through peak earning years or through their retirement years, what that's actually going to look like. And that's what I'm saying, we're running this enormous experiment where we haven't really had one full turn of humans full like life cycle to see if it even works.
You want to know what is an incredibly thoughtful retirement plan, in my opinion? The PPP, the Pirate Pension Plan.
Some would say it's akin to Tribe by Sebastian Junger. You know, you just want to build your network.
You want to build your network.
Tell me more about this
Pirate Pension Plan. It's less of a guarantee. It's more of a feeling. You know, and I'm not saying you can retire on feelings, but at least you want to feel good. And one way to feel good is by fulfilling the Pirate Pinky Promise. Listen, Jason and I, we get up here, we dance like monkeys, make fools of ourselves. And I would like to say we just do it out of the goodness of our hearts, but we do it with the expectation that you will fulfill the Pirate Pinky Promise, which is that you're going to smash that like button, hit subscribe, turn on notifications, yell at us in the comments, ideally, get inflammatory, get that algo churning, share with your friends. Though I recognize we're embarrassing. You might not want to share us with your friends. So maybe like anonymously leave a tip to your friends. But again, this is not for free. We expect a bit of an agreement here. You watch, you laugh, you cry. We bring joy, pain, entertainment. And all you have to do is click like. So thank you for fulfilling your obligation. Again, Pirate Pinky Promise coming soon with PPP loans, as well as the Pirate Pension Plan.
Nothing we say is investment advice. Corey's reference to loans do not exist. This is for rhetorical purposes only. One thing I want to talk about retirement.
Actually, the whole plan will be the rum bar we're starting.
There we go.
It's the inventory.
I want to one more thing that I think about this whole retirement thing, and then I have some other macro stuff, so to speak, is, you know, it happened the show that we're on, you know, the show us your portfolio and everything. And a lot of the questions were around retirement, right? A lot of financial advisors, you know, the core of their questions are around retirement. It always, like, that question makes no sense to me, but that's also my dysfunctional brain. But I was starting to think about it the other day on my walk, and it dawned on me is like, I think a lot of people that work shitty jobs that they hate, they dream of like lottery tickets and pots of gold, right? And a lot of times you'll hear them say like, I don't understand why this billionaire is still working. They've already won the game. They've got their pot of gold. And I'm like, oh, they don't see it's completely different. Like, a lot of people either work a shitty job and they dream this pot of gold or lottery ticket. And so they're always talking about retirement. And quite frankly, my dad is always telling me how many days he's got left till retirement. So I know exactly what this is. To me, I just want to solve complex problems. Right? I don't ever think about retiring. That, like, it's anathema to me. So it's just different perspective. Ironically, what happens is when you solve complex problems, a lot of times that pot of gold sometimes comes with it if you get lucky. And so it's interesting to me is like, if I solve a complex problem, I'm just going to move on to another complex problem. I don't care if there was money attached to it or not. And to me, it's just like very divergent ways of looking at the world.
I'm going to call bullshit.
Okay.
I want to call complete bullshit on you, because as someone who has done the same work for 15 years and had years where I've made a lot of money and years where I've made no money, I will tell you it's a lot more fun making a lot of money.
Oh, it's fun for sure.
So I'm gonna call bullshit that it's just about, I get it, solving complex problems. And look, I do it in the years I don't make money too, but it's a lot, like, it's fun to get paid. I sort of view it as like, it's communicating the problem incorrectly. It's not working for retirement. I think if you gave those people the money to say you could retire today, I don't think many would. I think what they're really looking for is just the freedom, so they don't feel the oppression of having to work to get out of student loans or housing debt or credit card debt, or feeling like they're constantly trying to outrun their bills, right? I think if everyone felt some sort of safety net, they would probably have a different view towards work, right? For many people who are not in the luxurious position you and I have found ourselves in, like, there's a big obligation part of work, which is they have to earn a certain amount of money to pay off all the debt and obligations they have, right? And so I think I would have a very different feeling about work if that was my life as well. Like, it would feel much more like an obligation than an opportunity.
Yeah, I think we're talking about two different things. Like, yeah, money's fun, money's cool, right? It buys a jet ski, and you never see anybody frown on a jet ski.
Yeah, jet skis
But
suck.
I agree with you.
But why would you choose a jet ski? Jet skis suck.
It's an old joke. It's somebody's bit. Like, oh, money doesn't bring happiness. Money buys a jet ski. And have you ever seen anybody not smiling on a jet ski? Or Daniel Tosh,
me.
Thanks.
If you get me on a jet ski, I will frown.
So yeah, because you're just getting beat to death, and you're probably going to chip a tooth on the front piling when you eat it.
Right, exactly.
No, my general point was, actually, it's always fascinating to me that we're never having the same conversations, in the sense that, like, people have very different views of the world. And it was more being around people that were like, this person made so much money, why wouldn't they retire? Why are they still working? And I'm like, oh, you can't see that it's not about necessarily making money. Yes, making money is cool. Making money brings security. It's just people have very divergent views of the world.
I get what you're saying, but I like, and this is total bullshit made up. I sort of feel like that view is being informed by, like, them, what they're working for, right?
Right.
Right. I don't want to use Maslow's hierarchy, because I don't think it really works that way, but let's use it as a basic example. Like, when you've gotten out of those bottom couple layers and you have enough saved and you're no longer in massive debt and you're not feeling the pressure of day-to-day bills, I think the way you think about work is very different than when you're constantly like being chased by that monster, right? And so for someone who's being chased by that monster, it's like, wow, work is like this there's a constant threat, right? And so the ability to be like, wow, I could just not work and feel safe, right? I think what would really happen, like, I think that's what they're alluding to. It's not that they would just, I don't think many people actually want to retire. I think many people want to feel fulfilled in life, and so they would just choose potentially another form of work, right? It's just that they have to do a certain form of work to make sure they pay their bills, and it's a form of work that they don't find engaging or fulfilling.
Anytime I hear Maslow's hierarchy of needs, I figure somebody's about to sell me beads and a mantra.
How did I do?
No, you know what I mean? It's like usually some spiritual person trying to sell me some new age spirituality. It's like, that's why whenever I hear Maslow hierarchy of needs, I throw up in my mouth a little bit. But you're fine on that one. That's totally understandable. I'm gonna get us off. Well, go ahead. I was gonna get us off this.
Get us off this topic.
I was watching an interview, I think, with Louis Gao and Grant Williams, I want to say, and Louis said something that I finally made a little bit of sense to me. Like, I hated this whole, when we were going through the Russia-Ukraine thing, about U.S. dollar, the decline of the U.S. dollar. Like, everybody, it's reignited again, in the last few weeks. Yeah. And this idea of taking them off SWIFT, like, that's going to do decline of the dollar, like all this stuff. Like, none of that stuff really made sense to me. But what I did think was interesting that Louis brought up was property rights. And historically, Chinese and Russians, right, have squirreled away their money in, like, Vancouver and San Francisco real estate. And as soon as, like, they took away Chelsea Football Club from, like, Roman Abramovich just for being Russian, like, we started, it didn't really matter necessarily maybe us taking them out of SWIFT, but as soon as you started affecting property rights, what Russians were allowed to own as businesses and property, now you've thrown a monkey wrench in the system where Russians and Chinese go, well, it used to be a safe harbor for us to buy property and businesses in the UK, Canada, and the US. Now they're not so certain anymore. And I thought that was a really, like, interesting that I really hadn't heard anybody else say.
Yeah, that actually is novel and something I hadn't considered deeply before, right? To your point, a huge amount of money flow came into Canadian properties. And there's this interesting problem, which is, as a citizen, how responsible are you for your government's actions? Right. Arguably, there are representatives, but they can also do a lot of shit I don't agree with, right? So if the Russian government invades another country and you as a Russian citizen own property outside the country, and then all of a sudden that property gets taken away from you, like, is it the world incentivizing you to overthrow your government, or what does it really mean for property rights at large? We sort of just, okay, like property rights are meaningless. We can take them away whenever we want.
Well, it's always been that with eminent domain, but hopefully the English law system, that we inherited is usually strong property rights. But then you get a little concerned when on a whim they take them away just for for your nationality. So yeah, it's very, in a way, I see how that extremely disturbing. The other thing he brought up was zero COVID policy.
But what's the other option, right? So you think about, like, not to cut you off, but I'm curious, if you're someone in China and you're looking for safe harbor for your money, you've been putting it in Toronto and Vancouver real estate, and all of a sudden you're like, oh shit, like if my government tries to invade Taiwan, all of a sudden I could lose all my money I've squirreled away in Canada. I mean, do you just throw in the Bitcoin? I hate to say it.
Yeah, just front running my next point. Yeah,
is this now a Bitcoin podcast?
No. Part of it was they were looking for like almost like mid-tier countries, that are between emerging and fully emerged, whether it's not like maybe diversifying across like Brazil, Turkey, South Africa, New Zealand, like Australia, that sort of thing. And then the other one that this is almost semi-related is what Louis brought up, is like during 3 years of COVID zero policy in China, right? We're about to reopen China, and these people have just had nowhere to go and nowhere to spend it. Like, haven't even been able to go to Macau. Is like, what's going to happen on that reopening? Like, we saw what happened in the US. I don't know about you, but I've been looking at flights this summer are astronomical. Is like, what's going to happen to all the highest, the most popular tourist destinations around the world when China reopens and people have basically been saving money for 3 years?
That's a great point. Great sort of built up demand, right? And can the world handle that consumer spending demand? Hard to say. That's a great point.
And especially these like chaotic, like winner take all effects, right? Like Paris, Prague, London. Like, you think they've been busy the last few years as America and Europe reopened, and now you've got that plus China reopening.
Yeah. Woo. By the way, speaking about the developing markets, I was swiping through TikTok the other day, and there was a creator who started talking about the BRICS: Brazil, Russia, India, China. And it was in the context of like cutting the US out. And it was sort of this like funny little, the US feeling bad about itself getting cut out. And I thought to myself, I can't believe this acronym is back. Like, anyone who was investing or around pre-2008, the BRICS were everything. And I believe it came from a Goldman Sachs research note is where the BRICS
of course it did.
But that it was like, that was all you need to invest in the US. And if you want growth in your portfolio, you buy the BRICS. And I believe there was an ETF that came out that was like BRIC. And then it completely died in the mid 2010s because emerging markets went nowhere for a decade, and everyone wrote BRICS off. And I cannot believe BRICS is back. I got nothing to say. I was like, I can't believe it's entered like normie language. Like, this is someone who clearly was not finance related who was talking about the BRICS.
That's why my favorite Schopenhauer thing is like that, selling tickets to the Conjurer show for every generation you live. Like, after you've seen the magic show 2 or 3 times, it wears off on you, right? And you just keep seeing it repeated and repeated over and over and over. And what's old becomes new again. And just like the BRICS are back, it's like fashion returns, right? That 80s, 90s fashion's back. That's so terrible. It was the worst 2 decades of all time for fashion, movies, music, etc. Yeah, you can eat that one.
My cargo pants were great. So is my flannel. I don't know what you're talking about. I actually think Wait, hold on. I actually liked early 90s grunge look. I would bring that back.
Well, there you go. Bring it back. I think some of the flannels are definitely coming back. It's when you can start layering in your thermal in your flannel, right? Then you're back.
Thermals.
And if you let the double shirt and if you let the lettuce flow and it's a while before you get a haircut, you'll be right back there. You got to bring out that Kurt Cobain dad vibes.
Yeah.
And then
I'm still trying to decide what kind of dad I'm going to be, by the way. I have time to figure it out.
What kinds are there?
There's like dad archetypes, Well, there's the dad who just ignores his children. I don't want to be that one. Right? But
that would be why I don't have kids.
I'm not the hunting dad. That ain't me. I don't think I'm like the overprotective dad. I've sort of figured that out. Like I'm like watching my kid crawl off the couch already. Like it is what it is. He'll learn. So I'm figuring it out. What type of dad archetype am I going to be? I'm not going full dad bod beard dad yet. Maybe. We'll see if I get there.
It's too early to tell on that one.
Yeah, I haven't given up hope that I can maintain some sort of physical shape. Yeah, I think there's a couple. I should map out the dad archetypes. I'm trying to avoid being the workaholic dad.
It's interesting when I'm at my in-laws that are, married with 2 young kids, and I'm on their like Wi-Fi. As soon as I get back home, like in my Instagram feed, it's all like dad jokes and like everything. Yes. Like it's amazing how it can just infiltrate your Wi-Fi network.
There was the old story about how like Walmart and all those places know you're pregnant before you are because of like how your Google search stuff. Dude, it's absolutely true. Like my wife shared with me one funny, mother TikTok thing, and now my TikTok feed is just filled with parenting, filled with it. My YouTube, nothing but parent hacks. It's horrible.
I got just because you like set me up, I want to end on a kind of a setup for you in a way.
Oh boy.
Love him or hate him, is Martin Shkreli one of the most interesting people in the world? And have you seen the new company he's got?
I don't know his new company, but for varying definitions of interesting.
Yeah.
Right? It's sort of like, is Elon Musk one of the most interesting people in the world? He provides a lot of entertainment, both good and bad. You get, he creates a lot of chatter. He is interesting in some of the things he does. Do I wish it would get toned down? Absolutely.
So Shkreli's got a new company called drgupta.ai. And so he's trying to disrupt the whole Dr. Google thing. And so he thinks with Dr. Gupta, by the way, yeah, like as in ripping the GPT, drgupta.ai. And he thinks it's better than you using Dr. Google at like Friday night, like 11 p.m. to try to find out what your symptoms are.
So I had this business idea a while ago. When my wife didn't know she was lactose intolerant, she was having, physical issues and couldn't identify what it was. And I said, I think there's an interesting business proposition or like an app you could build where the app checks in with you throughout the day. It's like, how much sleep did you get? What'd you eat recently? And it sort of like checks out your symptoms. And then over time uses all that to go, here's the pattern. The pattern is you keep eating milk, you idiot. And then you have, you're lactose intolerant, right? But I was thinking like there's more complex problems of people who get migraines. My business partner ended up being gluten intolerant, didn't know, kept having issues and kept cutting things out of his diet, except for like plain white bread. He was like getting more and more towards like plain pasta, plain white bread, trying to cut everything out. And that was the major culprit. And I was thinking to myself, there's, I think, a really interesting use of AI integrated into our day-to-day life. If we're willing to share the information, that it would be able to identify the patterns through that sort of conditional interaction.
Yeah, and then you do that across, tens of millions of people. You probably get, you can hone in on a better diagnosis, right, than any individual GP could. So but that's the interesting trade-off, right? Are you willing to share your health data?
That's a good question. Privacy concerns abound. I've already given all. I've given so much away to the internet. Who am I kidding? Did we talk last week about like the new hacks that are out where they're taking the likeness of kids and audio from kids? Yeah.
I think we were talking about Auto GPT and that stuff, and then there's that new podcasting one too. I can't remember the name off the top of my head. I'll look it up real quick. But like, yeah, pretty soon. I mean, they got our voices. We've done plenty of content. I think pretty soon let's have Tyler just spin up AI generated bots of us talking to each other.
Is it time to disclose that neither of us are actually here? This is all AI generated.
That would be awesome. Yeah, the new one's Wondercraft AI. But I think that really works for like news style podcasts, not necessarily podcasts that are about nonsense. So speaking of the nonsense, do you want to give our disclaimer and take us out of here?
Yeah. Well, everyone, this has been the Pirates of Nonsense. We appreciate you sticking with us for the full hour. Hope you had a wonderful week. I hope you have a wonderful weekend. Just as a last disclosure and disclaimer, nothing we say, do, interpretive dance is financial advice, accounting advice, tax advice, advice of any kind. Please seek a professional on all those matters. With that, Tyler, take us out.